The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. If you have any questions this morning, it's 877-927-6648. We're going to start the day today with the Hang Seng Index. I'm unable to get the chart for the DAX that I usually do, so we'll start out with Hong Kong. As you can see here, this is a long-term weekly chart. Folks, this is one of the reasons why I do technical analysis. If you can see this chart, you can see all the technical indicators that are there that really describe what the market is doing. I mean, it's certainly far from perfect, but we'll just check and see if we can get this chart up for everybody. And I saw it going through, but maybe it didn't go through. We'll double check. And that's a big 10-4. Copy that, copy that. Anyway, this chart, it would be on the front of a textbook for technical analysis, in my opinion. It shows the head and shoulders pattern, shows Fibonacci retracements, it shows Gartley patterns, shows ABCD patterns. I mean, it's got so many things in there that it's really a great chart to look at. So I hope it came through this morning. I sent it through twice. It looked like it came through, but we'll be able to see if that's the case. Now, we've got something big happening today in the market. The gold market is finally broken down below that key level that we were talking about, that 1265 level. I want to get up here and let you take a look at it and show you the importance of it. You'll see we've got down to the 1262 and change level. Silver is almost down to the 61% retracement at 1670. So that will be an interesting one to watch if that'll hold it. But frankly, it looks like the gold market is in trouble right now. It's just not acting well. The same is true as silver, and the same is true of the platinum market, is also under a great deal of trouble. If you remember, really not too long ago in the gold market, we were looking at a major bottom down here because we were quite bullish on it. And what happened was, I just wanted to show you the importance of these multiple numbers coming in here. If you notice on this chart back in May, around the 11th of May, we had a 50% retracement off the low in December. And if you remember, that December low was a 78% retracement of the December low from 2015. And so you would have two ratios coming together here. That's what gave the impetus for the market to go up and take out those highs at 1297. Of course, it only took it out by $1 and completed the ABCD pattern. But that's the reason that these numbers are so very important, because once they break them, it's really telling you that there's another cycle that's out there that is getting ready to, really move in that direction, very, very quickly. Now, let's just take a look at the Canadian dollar. This is one of the things that we've focused on in the newsletter for 24/7 this week. And if you'll take a quick look at this, you'll see that we had a beautiful patterns here up at that 138 level. You had double ABCD patterns. You had a 1.27 expansion. The market broke well over 4 handles all the way down to the 134 level. And then over a 2-week period, it could only make a 382 retracement. And as you can see, what's happening now is the market is pretty much in a free fall. We're not very far away from point D. We're trading near the 132 level, so we're within about 60 pips of that coming down. But with the strength of this move coming down, one would have to really execute some really strong money management things to keep yourself from getting into trouble. Speaking of that, let's just take a look on a shorter term basis here with the Canadian dollar. Because if you're looking for the market to go down, one of the things that you might want to do is to try to find a pattern that fits in with what you're looking at longer term. And if we take a look here yesterday, I'm saying you folks are not seeing the charts. What's going on today? I know they're posting. I just don't I don't. Yeah, they're coming up. What am I? I don't know what's wrong. Yeah, they're there. I don't know if there's a better way to do this, but okay, there you go. All right, good. All right, then you can see the Canadian dollar up here at the 78% retracement yesterday, and it was right at the 8. You had a beautiful Gartley pattern there. You had a perfect ABCD, and that's pretty much. It's my den camera setting. Oh, I'll have to fix that maybe during the break, but I don't know how to do that. I haven't changed anything differently, so. We'll see what's going next. Well, we'll see what's happening here. Never mind. Don't make any difference. Okay. All right. Some people are getting them. Some people aren't. So we'll have to do one thing at a time and see how it works out. But that's neither here nor there. But it looks to me that silver and gold are breaking down from here. If something changes, then I'd certainly let you know. We have some support in silver at that 1670 level. There's not much more support in the gold. It's broken down. And so the odds are that we are probably heading down in this market. That's what it looks like, from the cheap seats here in Tucson, Arizona. Let's get on to the market because we've got two markets, of course. We've got the NASDAQ, which is in a world all of its own. And then we also have the S&P and the Dow and the Russell. Now, if you look at the NASDAQ, and basically Bloomberg reported that there were 6 stocks that that brought this market from 59 to 56. Basically, those are the ones that we looked at yesterday: Apple, Amazon, Google, Netflix, Facebook. I can't remember the other one, but there were 6 stocks that basically did that. Well, that might be true, but the NASDAQ composite, the big one, also got hit very badly. So there was a lot of other stocks in there that were getting hit quite badly. But with the NASDAQ 100, it's a price-weighted index, and it's a cap-weighted index. So you've got a very expensive stocks that are selling for 1,000, and it's based on the number of shares outstanding, and that's where you get these tremendous weights. Now, you'll notice that we came down and we stopped pretty close to the 1.618 expansion down there within a few, 20 or 30 points. Now, what we've done here over the last 24 hours is we've rallied back to a 382 retracement here in the NASDAQ. That's here at this 57.45 level. Now, that doesn't mean it can't go higher. It's just interesting that it's taken that long. If you look at the S&P and if you look at the Dow Jones, you'll notice that those have gone all the way up and retraced 78% of the move. So we're looking at 2 different markets here. So if the NASDAQ really starts to rally, it's going to push the other stocks up, would be my guess. That's how I would have to. That's why I would have to be looking at it. We'll have to wait and see if that's going to be the case, but that's what it looks like this morning. We'll have to wait and see. Now, tomorrow morning, we're going to have Bill Meridian on from Cycles Research. Hold on, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS Profile proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to point out that the silver has just made the 61% retracement on the daily chart. Gold has already broken through it by quite a bit, but as you can see here, well, there are actually two different points to look at on the gold and on the silver, but on the daily chart on silver, we did hit that 1670. So if you're buying silver, you certainly don't have to risk more than a dime here, which is $500. Now, one of the things I wanted to mention today is most of you know that Mark Douglas was one of my very best friends. We lost him September 10th, be 2 years coming up here pretty soon. But I wanted to, he left me so many things to look. We're still seeing the now. Boy, I don't know what's going on here. Just give me a second here and we'll get this silver chart up. I don't know what's going on, but we will get it figured out. Hold on here. Let's see if we can get it done here. How's that? Maybe that'll make everybody happy. You can't make everybody happy. That's the main thing. Okay, yes, this is true. Mr. Z has just put something in the den that is really one of my favorite things from Tony Robbins, and that is the acronym for FEAR, F-E-A-R, false evidence appearing real. If you study fear at all, there was a guy that wrote a book about risking. I can't remember his name. Boy, he was a really smart guy. He passed away about 15 years ago at a relatively young age, just right out of the blue. And boy, I can't remember. He was a doctor too. I'll have to go look to my library and look at it. But he had a whole chapter in there talking about how the things that we fear almost never come true, about 95% of them. And you have to think about that for a while, but that's probably very, very true. When I first met Mark Douglas back in 1983, he was working down at the, working with Tim Slater down at the a CompuTrack down in New Orleans, and they were doing these conferences and stuff. And I first met him in Las Vegas. I met him in Las Vegas, and I had him. I went back to Chicago and visited him for a while. And at that time, he was working for Merrill Lynch, analyzing all of their commodity traders' profiles on how they had lost money. He was going through all the accounts to find out, why these people had lost money, and then he interviewed hundreds of them. I mean, it was just he just did a tremendous amount of work to try to understand why these people consistently lost money. The statistics behind trading is that if you start out trading, the odds of you winning on your first go around is about 30%. 20 to 30%. But if you stick with it over a period of years and learn not to do the wrong things, your percentage is going to get up there to, finally you'll realize that, yeah, well, maybe I can do this. And that's the main thing. So those are the things that you want to be looking at when you're doing this. But one of the things that Mark showed me that we talked about is he did an attitude survey for these folks at Merrill Lynch to ask them questions about how they approached a trade. And some of the questions that he asked were really interesting. Like the question, this was a yes or no, these were all yes or no questions, but it is to make money as a trader, you have to know what the market is going to do next. And you wouldn't believe that most of those people, 85% of them, agreed with that. Well, that's a wrong premise. That's right, Mr. Z, it's wrong. And the reason why is you never know what the market is going to do next. You might think that you do, but you never know with 100% reliability. You don't know that. The second thing is you don't know how much they're going to make you, how much you're going to give you if, in fact, you are wrong. You know that? So that's the main thing that you got to realize, that you don't need to know what's going to happen next. It's just really amazing. And another question that they had was, and one of the most important ones that was almost always answered the wrong way, is that this risk is always defined before you enter a trade. Almost all of those people, I think it was on the neighborhood of about 89% of the people, did not do that. And that was because many of them were not using stops. They didn't either know how to use them, or they didn't want to, or whatever. But if you don't use a stop, you're basically telling the market, hey, I know more than you do, and I know where you're going and you don't. So that's another premise that is really, really bad, And another question is making money as a trader is a function of the analysis that you do, yes or no? The answer to that is no. It's the amount of money that you have at risk and how you manage that money. That's the key to making money as a trader. It's not the amount of analysis. Boy, how many people have we seen with the analysis of paralysis? Can I raise my hand? My hand's up in the air. How about yours? I do so much analysis sometimes I have to spin around on a carousel to see where I am. But I try to get it down to a point where I'll say, if I buy here, how much do I have to risk to see if I'm going to be right or wrong? That's basically the bottom line. The only thing that you can control in the risk-reward equation is the risk. You don't know what the reward's going to be. You don't know the volatility of the market. You don't know any of those things. So the only thing you can really control is how much money do you have at risk, and that's the key. Figure out how much you have to risk and start trading, because once you do that, you have a really good chance of being, quite successful at it, in my opinion. Another question that was really interesting is, this is one that we all are worried about. It says, I wouldn't even bother putting on the next trade if I was sure it was going to be a winner. No, of course, you knew it was going to be a winner. You would certainly do it. But take the other side of that. When you lose 3 or 4 times in a row, you start to question your system or your ability or whatever it's going on in your life. You say, whoa, why am I so snake bit today? But you have to realize that every trade stands alone. But when you look at it in a combination of a whole bunch of trades, that's a whole different area. And believe me, all of us go through periods where we can't find our hat, sitting on the chair behind us. That happens to all of us. So you have to realize that you're going to go through those. Usually when I have a couple of bad days in a row, which is, more often than what I'd like to see happen, but I try to take a day off and, clear my thoughts a little bit. And the longer I take off, the better I am when I come back, because when I take a week off, which isn't very often, you don't want to fade me on those, because I'm really focused. I'm watching the things that need to be watched, and those are the ones that pay the bills some of the time, and most of the time anyway. But that's it. We'll have to wait and see on these. This is the one that was my toughest of all the questions. There were 10 of them. I'm going to give you some of them today. We'll do some of them another day too. But it says, even when I have a clear signal to reverse my position, I find it extremely difficult to do so. And the answer to that I had was yes. And that's the answer that all of the neophyte traders had also. And Mark Douglas worked with me for months and months and months, getting me to reverse on my trades, and I still had the most difficult time doing it. I do it better now than I ever had, mainly because of his memory, and I tell you that for the fact because I can see him sitting behind me here in the office laughing at me because, I said that this was going to go here, and if it broke, it was going to go there. And he said, why didn't you sell it to take the ride down? And I say, I have no idea. And the main reason was the frustration of being wrong. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, getting back to the fear part of trading that we talked about with Mark Douglas and also with Anthony Robbins. By the way, those of you that have never done any work with Anthony Robbins, I highly recommend you do his power program. I think it's a set of 12 tapes, and it's all about neurolinguistic programming. And I've been working with Tony for forever, but way back in 1985 when he was just a kid, and now he's a big superstar. But it's very, very helpful to. Especially for trading, it's really very important because it makes you think in terms of probability and the fact that you're going to be wrong often, and you're still a good person even when you're wrong. But when we're talking about fear in trading, there's the four major fears that Mark always talked about, and that is the fear of being wrong. I mean, you get used to that one because you're going to be wrong a lot. And you got to kiss a lot of frogs before you find a princess, boys and girls. The second one is the fear of losing money. You got to get used to that one too, because in order to make a profit, you've got to risk a loss. That's opportunity. So you have to remember that. This is the one. These next two are the ones that you have to work on the most. And the first one, of course, is the fear of missing out of a trade. And I always remember what. I think it was Roy Longstreet and also Jesse Livermore said this, and Amos Hofstadter said this, Bernard Baruch said this, that it's much better to be out of a market wishing you were in than in a market wishing you were out. Stop and look at the people that have been really bullish gold here for a long time and have stayed bullish from 1297. That's not a good feeling. The same thing of, the people in the NASDAQ that, bought it on the high day, back there on June 9th before it dropped 5%. And then finally, the last one, of course, is the fear of leaving money on the table. This is the silliest one of all, boys and girls. Stop and think about this. The fear of leaving money on the table. The only way that you cannot leave money on the table is if you get out exactly at the low or high tick. Is that a ridiculous statement or not? The fear of leaving money on the table can only work is if you don't get filled on the exact low if you're short, or the exact long, or the exact high if you're long. So you should have no fear of leaving money on the table. That's going to happen every single time. It's fear of losing out. Yeah, some of those you're going to miss out on, but the fear of leaving money on the table, that's the silliest fear of all. That's the one that you really have to stop and think about that. You're always going to leave money on the table. Sometimes you're going to leave a lot of money on the table. But the little part is the easiest. So that's the main thing that you certainly want to work on. So, those are things that you want to try to do. Many of these, well, all of these things are covered in both of Mark's book, The Disciplined Trader, and then also Trading in His Own, and also his new book that is really fabulous. It's only available on Kindle through Paula, his wife, but that's a compilation of all of Mark's work. He spent the last 4 years of his life working on that book, and I'll tell you, he's probably got 5 books that he wrote just writing that book, that just pages and pages of things that that make it, very, very interesting material for trading purposes, for sure. But one of the main things that you need when you're trading is you have to have a carefree state of mind with a foundation of absolute trust in what you're doing. In other words, let's just take a look at, if you're looking at the, let's just say the NASDAQ here, and we're watching this price here at 57.45, okay? If this is going to be something that's really important to you, you have to say, okay, I'm going to try it here at 57.45, and I'm going to stop it at 57.55 because I'm going to lose $200 or $400 if I do this trade. So you have a belief in the system that you're doing, and you've also taken steps to prevent yourself from getting hurt too badly. And that's what you really have to do. Someone's asking me to take a look at the gasoline contract. All I can do right now, Mr. Z, is to I'll have to do it at the break to bring it up because just give me 1 second here. I might be able to do it here as we speak. because I know we hit a major 61% retracement here in the crude oil just a little while ago at that 45.78 level. And all I have to do is find the X's here, and I'll get this up for us. And if you have any questions, folks, it's 877-927-6648. That's the main thing that we want to be watching here. The gasoline's not looking that good. You see, gasoline is broken down. Let's just bring this up and show you. It's just not acting very good at all. But, that doesn't mean it can't change. But let me get this chart up. It'll be up here in about 1, 2, 3, 4, 5. Oh, it's going to take longer than that because I can't find it. All right, where did I do with it? Here it is. All right, let's get the gasoline futures is coming into the room. We'll pull it up here, and you'll see here that the gasoline futures, not like heating oil and not like crude oil, has broken down. And even though it had closed 3 days at the 78% level at that $1.50, now it's trading at a buck and a half lower at 148.60, and it's made lower lows on the week. So it's acting very, very bearish compared to the crude oil and also the heating oil. So gasoline, is lagging badly, and that shouldn't be happening because this is one of the stronger seasonal patterns that we have. The gasoline contract, because it's the summer months, people traveling a lot. During the months of June, May and June, this is the strongest for gasoline futures to go higher, and they're not acting seasonally. And when they don't act seasonally the right way, boy, that's really a bad sign, because it's telling you the demand part of the equation is going to slip down after Labor Day, and then you'll be looking at potentially much lower prices. That's the main thing to look at. Whereas in crude oil, the crude oil has held the level. Let's just pull this up and we'll take a quick look at it. You'll see that crude oil has been able to at least hold above that level. Just get there in just a second. And you'll see that it has been able to hold it up, relatively well. And it had the two tweezer bottoms that are still there. And actually, we had another tweezer bottom today, so there's 3 tweezers there. And, but believe me, it's just like gold. Once it gets below that 1266 level, it doesn't have a great deal of support. So, watch it very, very closely. That's the key thing to, pay attention to as we come here this morning. So we got a little bit of strength in the market. Now we're just right about the 61% retracement in the S&P. The NASDAQ, let's take a quick look at that one and see if we're getting above that key level at 57.45 to 57.50. Give me 1 second, and I should be able to pull up a price here very, very quickly, and we'll see what we're looking at here. 1, 2, 3, and we should be okay. Yeah, we're already above the 382 level, and right now we're trading at 57.52. So we are in the midst of a bounce. The ABC structure on this measures up to this 57.60 level. That's from your low that we had down at 56.40, and then up and down, and this is where we are now. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, the next chart is we were asking a question or answering a question from Mr. Z in the den, and that is the Russell small cap. This is the IWM, the ETF. If you'll notice the 3 red boxes there, that's a 3 drive to a top pattern. They're very symmetrical. The ratios are pretty much spot on, and you can see the retracements. And you'll notice right after drive 3, we made a beautiful ABCD pattern that came down right almost exactly on the low at this 134 and change. And now you can see the ABC structure could take us up just a little bit higher to this probably 143, I'd say 143.70 area, which isn't too far away from where we are right now. But that would complete a butterfly pattern at that point. The butterfly pattern, folks, was a gift from Bryce Gilmore. He had a program called the Wave Trader that went through all of these patterns and all the ratios, and it was all color-coded. And when I would watch it go through, I would see these things flash up that looked like butterflies. And so I would freeze the screen and then look at it and try to understand what was happening. And I could see that it was a new high with an ABCD structure built inside of it, or a new low with an ABCD structure built inside of it. So I called it a butterfly. And another reason for that is many years ago, when we used to get our charts, this was going back into the 70s, that's 1970s, not 1870s. We used to get our charts every Saturday morning by special delivery from Commodity Perspective. They were 17 by 14 charts, and these were all commodity charts. There was nothing in stocks. And when I was finished with these charts, my 2 daughters would cut out the chart patterns, and what they would do is they would color them with their little crayons and then cut them out and put them on the refrigerator, and it looked like they looked like little butterflies. I mean, and then later on when I met Bryce, which was about 15 years later, not quite that long. Yeah, it was about 10 years later. Yeah, about 10, 12 years later, I realized that's actually what it was. So that's the story behind the butterfly pattern. It's basically an ABCD structure that goes into new high ground, or an ABC structure that goes into new low ground. That's primarily what you're looking at when you're watching these markets move around the way that they do. So just keep an eye here on some of these things. We're now rallying pretty good. We're making the ABCD structure now in the E-mini S&P. That's going to take us up to almost where we are right now. The ABC Gartley on this brings you to the 78% level, which is right at, we're almost there, 36.5. So watch that 36.5, 37 level in the S&P, because that is a Gartley pattern. You're going to have a really nice ABCD structure, and that's going to take you pretty much up to that level. Now, it can go through there by quite a bit for sure, but this is just another pattern. Sometimes they work, sometimes they don't. That's the key of what we're looking at here, because they don't always work. If they all worked every time, that would take pretty much the whole fun out of all this. But right now we have a pretty strong bullish bias for today, opening stronger and holding these gains. But as I mentioned, we are right at some really key support in some of these things. Let's see if we had the NASDAQ get above the 60 level. We probably did, just because of the emotionalism of the market. We'll see where we are. Yeah, well, we're up here right now, 57. The number I was looking at in the NASDAQ was 57.61. We're 57.64, so that's within 3 points of it. Whether that's going to be it or not. Remember, this is amateur hour, the first hour of trading. So if you're thinking of putting a short on, wait till the first hour of trading, till things settle down, because these things can run really strongly, and you don't want to get caught in one of these really running markets. That's the main thing that you don't. Remember that the 50% retracement in the NASDAQ from the whole move comes in at 57.71. So we're only 4 points away in that. But like I said, it's better to wait that first hour, at least the first half hour, to get this emotional buying out of the way, because that's when many of these orders come in. That's why the opening price can be so important in that first half hour. So watch these numbers. They're just numbers, but keep an eye on them. They're nothing more. Now, another market that we've been talking about for quite some time in the currency realm has been that euro. The euro has been having a lot of resistance up at the 112.90 level. That's one that looks like it's got legs to move to the downside. It hasn't moved down very much. We've only come down about 100 pips or so from the high, but at least the high is held since that time. But the $64 question is it going to turn from this level, or is it going to blast through? Now, if it blasts through, that means that the dollar index, and we'll put this up to let you take a look at it here, and this is about as pretty as technical picture as you can find. Oh, we've got a friend from Singapore calling in. William, how are you?
Oh, I'm good, thank you. And how is Mr. Pesavento?
I am above ground, staying away from open graves, my friend. It's good to hear your voice. What can I do for you, William?
Okay, actually, I thought asking you two particular, counters. One is gold.
Yes.
Actually, I missed this up move and I was actually a bit bearish since I think quite a few weeks ago. So now it has come down from the previous high at 1298 to 1299. What would you think is a good support? Whether it will break the previous support at around 124547?
Yeah, well, to me, William, the real key support was at 1265. That was down $34 from the high. It was also at a 50% retracement of the low and 78% retracement. Now, we did break it by about $3. But if we close strongly today, in the fact that silver hit the exact 61% retracement at 1672, then I would say, maybe this is going to be a good spot. But I would have to wait until either late today or tomorrow to make sure that support holds in the gold market, because it had every reason to hold exactly at 1265. It hit there 3 times and then broke through there. And maybe it was just looking for stops, but I would say that it has to stay there in order for it to be good.
Okay, so which means if it can hold above, then we will not see 1245, unless it's broke, really decisive below 1265, right?
Yes, it's got to close below 1265 today, and then I would say it certainly has bias to the downside, and that would probably mean that silver would go below the 1672 level also, and that would be a reason to look at it also.
Oh, okay. And the other one, I would like to ask you regarding BIIB.
Mm-hmm.
BIIB.
Yes, I don't.
I think.
Go ahead.
Oh, I saw it hit the 78 0.6% retracement and bounce back. But I'm not sure what is your view on this.
I'll tell you what I'll do. I'm going to try to get the chart ready. We're getting ready for a break here, and what I'll do is when we get back from the break, I will bring up this chart and we will talk about it so you'll be able to look at it. This has been a really strong bear market for a long time, and all we've done now is make a 382 retracement here. So this is not acting like a very strong stock. I mean, this is I don't know what it. See, it's only at a 382 retracement of the whole move. Stay with us, William. I'll cover this when we come back. Okay. Thank you for calling in, and I'll talk about it when we get back. Thank you, my friend.
Okay.
Bye-bye.
Okay.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we posted a chart of BIIB. I know it's an ETF. I used to look at it. I can't remember what it is, but this is a chart that William in Singapore asked us about. You can see this chart has got a lot of bearishness. It's been going down for almost a year now. And as you can see, we did have a really nice Gartley pattern at the 61% retracement up there at 297. We dropped down to 246, which was a 78% retracement off the low, which should have been a really powerful cycle. Yet over the last 2 weeks, we've only been able to rally to a 382 retracement. Now, we could still go higher, but anything below that 246 level is going to trigger more selling on the downside. So right now, it's in a uptrend. We did have really strong support at that 78% level. There was an ABCD structure there from February. I didn't put it in the chart here, but you can see it easily. And so the problem is that we can only make a 382 retracement so far. Now, if we get stronger and we get above this 267 level, then this could possibly change. But right now, it doesn't look like it wants to do that. In fact, it's actually down today with the rest of the market up, which is another sign that is not the best in the world for looking at some of these. Now, remember, tomorrow we're going to have Norm Winsky from Astro Trends on, and then let's try that again. Tomorrow is going to be Bill Sarubi from Stock Market Cycles out of Vienna, Austria. On Thursday, we're going to have Norm Winsky, and then on Friday, we'll have Stan Harley of the Harley Stock Market Cycles. And all three of those guys give us some great deal of information. So watch these markets really carefully because they have a tendency to turn on a dime. I still believe that what happened in the NASDAQ has major significance to the downside, but we'll have to let the market tell us this, over a longer period of time. That's really what we'll have to do. And one thing that you want to watch, of course, is the euro. If the euro gets above this 112.90 level, we'll go a lot higher. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.